Hello everyone, welcome to series of webinars organized by ACCA. I'm Owais Mirchawala, your tutor of Advanced Taxation. Today is the last day of our webinar series in which we have been discussing the series of past papers. As you all know that in first 3 days we discussed the complete past paper of June 2022 attempt. Today we will move forward and we'll look forward towards a new past paper. Since it is less than 1 week to the examination, I have been emphasizing from the very start of these webinar series that you should be giving your time towards more and more practice. The name of these sessions is Practice to Pass. So the emphasis is to motivate the students to do more and more practice so that they can increase their chances of passing the exam. As you all know that ACCA has provided the practice platform on which different past papers are available. Now, if you remember in the advanced text head in the UK variant, we are already done with the past paper of June 2022 attempt. Okay, now in the past exam attempt library, one paper is available of June 2021 and one is available of September-December 2021. Now, these two papers were practiced by me in the previous webinar of the last exam attempt. You people can access that from my YouTube channel on which I have uploaded their videos. So rather than doing these papers again, what I am doing in the today's session is that we are done with June 2022. The videos of June 21 and December 21 are already available on my YouTube channel. Today, we will be doing the specimen exam of ATX. Today, we will be doing this specimen exam. Now, what I want from you people is that once today we start doing this specimen exam, you should complete the remaining questions of this specimen and then you should attempt few papers given in the practice exam heading. Now, whenever you do any paper, you can self-mark yourself from the marking tab. When you will complete a paper, you can go in the marking tab and you can self-mark yourself. Like for example, if you have attempted an advanced taxation paper, you can self-mark yourself and here you will be provided with a complete marking scheme and the examiner's sample answer. So this tool is a very good tool and this can give you a very good insight that how you have to prepare yourself. And as I told you people at the start of the webinar series on the first day that you people can complete one entire paper and send me to me for marking also. You people can WhatsApp me. You all have my number. The link of the WhatsApp group is shared on the handouts tab. So today we are moving towards the specimen exam of advanced taxation. See, as I told you people in the previous class that in the last 5 days, now there are only 5 days left to the exam. What you people should be doing is that you people should divide your study time in 3 portions. In first portion, you should be revising your rules. In second portion, you should be reading the examiner answers for old papers. And in the third portions, you should attempt few papers on the practice platform and either self-mark them or send me for the marking. Okay, I hope that you people are following my approach and this will help you in getting a good score. So let's start with the specimen paper of advanced taxation. June 2022 exam paper is done. Okay, 2 exam paper discussion June 21 and December 21 is available on my YouTube channel. They are also available on the ACCA YouTube channel. These papers were discussed by me in the previous webinar series. So today we are moving towards the specimen paper, and your homework, your assignment will be that you have to complete this specimen paper and you have to attempt the practice exams also. Do more and more practice so that your chances of passing the exam are increased. We are moving towards question number 1 of specimen exam. I want you all to concentrate on it. Today we will complete the question number 1, and then since today is the last day of our webinar series, you people can do question 2, 3 and 4 on your own and either self-mark it or send me for the responses. Okay, if you have any query, you people can ask me on the questions tab, or you can also WhatsApp me. I have already shared my number in the previous sessions. Now, let's start. You should assume that today's date is 7th December 2022. Your manager has had a meeting with Farina and Lauda, potential new clients, who are the partners in FL partnership. The memorandum recording the matters discussed, together with an email from your manager, is set out in the exhibits. Now, normally in this first screen, we are provided with very basic information, which is normally not too much useful. Obviously, the detailed information is available in the exhibits. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Memorandum and an extract from an email from your manager. Now, let's start this memorandum. Let's look at it. I want you all to concentrate on it, and do remember that it is the first reading of the question. Whenever we do the first reading of the question, it is primarily aimed to identify the data. Then we'll go back, we'll read the requirement, and then we'll come back to the question again. Now, to the files from the tax manager, date is 6th December 2022, subject is FL partnership. Okay, now let's start reading background. Farina and Lauda began trading as FL partnership on 1st May 2017. Accounts have always been prepaid to 31st March each year. They are each entitled to 50% of the revenue, profits, and capital profits of the business. So basically, the business is in 50-50 ownership. On 1st March 2023, the whole of the FL partnership business will be sold as a going concern to JHPLC, a quoted trading company. The consideration for the sale will be mixture of cash and shares. Capital gain tax relief on the transfer of the business to company. Incorporation relief will be available in respect of the sale. Okay, so they have been doing the business since 1st May 17. They have been doing the business since 1st May 17. On 1st March 23, they will transfer it to the company. Okay, JHPLC. Listen to me carefully. They have been doing the business since May 17. On March 23, they will transfer the business to the company as a going concern. Okay, Farina and Lauda will both pay. Farina Okay, there was some issue. Resuming back. Can you people listen to me? Everyone? Okay. Sorry for inconvenience. Farina and Lauda will both pay income tax at the additional rate in the tax year 22-23 and anticipate continuing to do so in future years. They are wealthy individuals who use their capital gains exemption amounts every year. Both of them are resident and domiciled in UK. So let's brief up the background which we have read. Let's brief it quickly. They have been doing this business since May 17. They have been doing this business since May 17. On 1st March 23, they will transfer the business to a company. Okay. Their consideration will be mixture of cash and shares. The incorporation relief will be available. You all know that when we transfer our ongoing business to a company, we are eligible for incorporation relief. They both are additional rate taxpayers, okay, and they use their annual exemption amount every year. Let's move forward. The sale of business on 1st March 2023. The assets of the FL partnership business have been valued as set out below. All of the equipment qualified for capital allowances. Now goodwill, which has a value of 1.3 million, but cost is nil, zero. Inventory and receivable, value and cost both is 30,000, and equipment, the value is 150,000 and cost was 200,000. No item will be sold for more than cost, which means that there will be no capital gain on the equipments. The total value of the consideration will be equal to the value of assets sold. Farina and Lauda will each receive, now it's each, which means 740,000 for Farina and 740,000 for Lauda. Now 140,000 pounds in cash and 200,000 shares at 2.4% holding in JHPLC. This means that they will not control JHPLC. C. Farina and Lauda were doing their business as a partnership, FL partnership. They will give their business to JHPLC and the consideration will be cash and shares. Please listen to me. The consideration will be cash and shares, but their shareholding will be 2.4% each, which means that they will not control JHPLC. Okay, let's read further. Future transactions. Farina. On 1st August 2023, Farina will make a gift of 15,000 of her shares in JHPLC to the trustees of discretionary trust for the benefit of her nieces and nephews. So it will be a chargeable lifetime transfer, a CLT. Farina will pay any inheritance tax liability in respect of the gift. The trustees will transfer the shares to the beneficiaries over the life of the trust. Farina has already made the following gift: cash of 300,000 to trust on 1st May 21 and on 1st July 22, cash of 40,000 to one of her nephews. So this is some detail given about the future transactions. See, we are just doing the first reading of the question. We are identifying the data, we are identifying the topics, but we'll look at the requirement and then we'll come back. Let's move forward. Lauda. On 1st June 2024, Lauda will give 40,000 of her shares in JHPLC to her son. For the purpose of giving our advice, the value of shares in JHPLC can be assumed to be £3 in March 23, £4 in August 23, and £5 on June 24. Okay, so we have done the first reading of the memorandum which we were provided with. Let's move towards the email of our manager. Please listen to me carefully and we'll draft the answer along with it. An extract from your manager dated 7th December 2022. Please prepare a memorandum for the client file consisting of the following words. Number 1, capital allowance. Okay, a detailed explanation of the capital allowances of the FL partnership for its final trading period with the sale of equipment to JHPLC for £150,000 on 1st March 23. So in part 1, we have to comment on the capital allowance implications of the transfer of business. Okay, before reading forward in the email, as you all know that the email divides the requirement. As you all know that the email divides the requirement. The first requirement is capital allowance, then there is a requirement relating to Farina, and then there is a requirement relating to LODA. Let's read the requirements. I want you all to concentrate on it. Part A. It is anticipated that Farina and LODA will require some highly sophisticated and specialized tax planning work in the future. Set out information that would be required and actions that should be taken by the firm before it agrees to become tax advisor to Farina and LODA. How many marks? 5 marks. Now, as you all know that this is a routine requirement in question number 1. In question number 1, there will always be a requirement relating to ethics. Set out the information that would be required and the actions that should be taken before it agrees to become tax advisor to Farina and LODA. Please respond to me on the chat box. What is the information and the actions that you should take? Everyone, please. What is the information and the actions you should take before agreeing to become the tax advisor of Farina and LODA? Very good. The first thing, we will look at the proof of ID and address. Number 1. We will look at professional competence because they require some highly sophisticated and specialized tax planning. Number 1, proof of ID and address. Number 2, competence. Number 3, we will take a clearance from the previous advisor. Very good. Okay. We will think about the money laundering issues. Very true. We'll think about the money laundering matters. And see, listen to me. Farina and LODA both are the partners and they are selling the shares to JHPLC. So we have to think that maybe they don't involve in any situation of conflict of interest. Like Farina may be personally wanting that firm should give her advice which is beneficial to her, whereas LODA would also be thinking same. So we have to create a balance and we have to avoid any situation in which conflict of interest can arise between Farina and LODA. See, what you need to understand is draft a deal in such a way that I get greater benefit, or maybe LODA asks for something like that. So we should think about situation of conflict of interest also. So now if you look at it, a 5 marks requirement, and I always say that it's the best requirement in the entire exam paper always. It's the best requirement because it's just a piece of cake. Okay, let's see how I draft the answer. And I believe that you all know that how I'll be drafting because I've already done the similar requirement when we were discussing the June 2022 paper. So question number 1, FL partnership. Okay, This is our requirement. Okay. So set out the information that would be required. Our firm would require information about proof of identity and address of Farina and Loda. Further details about their source of income and business will also be required. Okay. One student is saying that, sir, you forget to make the memorandum. I have not forgotten. If you see, he has asked about the memorandum in requirement B. He has asked about the memorandum in requirement B. In part A, he has not asked about the memorandum. So I will make the format of memorandum and I will be solving the requirement B. Okay. In part A, he has not asked about the memorandum. He has specifically asked for memorandum in part B of the question. Coming back, our firm will require information about proof of identity and address of Farina and Loda, and the actions that should be taken before it agrees to become tax advisor. Our firm should take professional clearance from previous tax advisors of Farina and Loda. It needs to be inquired. It needs to be inquired that whether any ethical grounds exist due to which previous tax advisor is not providing further services. Okay, if any ethical issues are identified by previous tax advisor, then our firm should not accept tax engagement of Farina and Loda. So first of all, we will require information about their proof of identity and address. Then we need a professional clearance from the previous advisors of Farina and Loda. What else? What else? Okay, one student has asked that, sir, we should contact the previous tax advisor with the permission of the client or without permission? Obviously, with the permission of the client. Otherwise, no one will reply you. Okay. Now what else? Our firm should, or I would say, it also needs to be considered that whether any ethical issue, that whether any issues exist in relation to ethical code. Okay, that whether any issues exist in relation to ethical code. What can be the issues in relation to ethical code? Integrity of the client, competence and due care of our firm. Okay, one student has suggested we should also think about the ongoing litigations against Farina and Loda. Yes, you can refer that also. Okay, it needs to be evaluated that whether any integrity issues exist in relation to Farina and Loda. Further competence of our firm also needs to be evaluated in relation to services of Farina and Loda. Why? Why the competence needs to be evaluated? As they require, it was written here, as they require some highly sophisticated and specialized tax planning work. So we need to consider that whether we have the required competence or not. Okay. Yes, we should also think that whether our firm should have sufficient time or not. Okay. If any issue exists in relation to ethical code, then our firm need to consider a safeguard or rejection of tax engagement of Farina and Lauda. Now see, if you remember, the similar answer was drafted when we were answering the June 2022 paper. Similar approach was being used. Okay. Lastly, our firm should also consider situation, a possible situation of conflict of interest which may arise between Farina and Lauda. They both may be expecting that our firm will give an advice to either of them which can give greater benefit to one of the partner. Like they may be expecting that we can advise a better date of sale to any of the partner. So there can be a situation of conflict of interest, and maybe a blame is created on us that you gave a greater favor to that partner or whatever. Okay, our firm may consider using independent, separate, independent partners for each of Farina and Lauda, so that if a single partner would be advising both of them, so maybe either Farina or Lauda think that the partner gave extra favor to one of them and he acted in such a way that one of the partner got greater benefit and other got ignored. Are you getting it? So first of all, it was a 5 marks question. First of all, proof of identity and address. Then clearance letter. If any issue existed, we shouldn't be accepting the engagement. Then we should think about the ethical code. Referring the word ethical code itself is sufficient. You can also write that the ethical code of ACCA. Yes, that's also acceptable. It should be evaluated that whether any integrity issue exists, and we should also think that whether we have the sufficient competence. And lastly, we should think about the situation of conflict of interest. Like just take an example that if there is a partnership firm, each of the partner may be thinking that the advisor will give him a greater favor, will give him a best advice, maybe at the expense of other partner. Are you getting it? Please tell me. Is it clear? Everyone, is it clear? A very simple requirement of 5 marks. We have done a similar one in June 2022 paper. Okay, let's move forward. A very easy requirement, that what is the information you require and the actions you would take before accepting to become the tax advisor for Farina and Lauda. Okay, let's move forward. Now let's look at the requirement B. Prepare a memorandum requested in the email from your manager. Part 1, capital allowances. Part 2, Farina, and Part 3, Lauda. So let's develop the answer for Part B. Okay. Response to manager's email. Okay. Now in this part, we have to make the memorandum as stated in the requirement. Okay. Prepare the memorandum requested in the email from your manager. So we are preparing a memorandum. Prepare a memorandum as requested. Okay, you can pick up the starting details from here. To the files from Now, you are not the tax manager, you are the tax supervisor. Why? Because manager sent you the email. Date is 6 December 2022. Subject FL partnership. Okay, so a simple format of the memorandum, we just transferred it from the question. Okay, now we have to comment on capital allowances, 5 marks. Then we have to comment on Farina, and then we have to comment on LODA. So we are doing with this part 1, capital allowances. Let's go back and read the question in detail again. See, we did the first part, information that is required before accepting the client. Okay, we need to gain information about proof of identity and address, clearance from the previous advisor, ethical issues, and conflict of interest. Then we are preparing the memorandum. Okay, capital allowances. Now, let's look at it, that what he is asking in relation to capital allowances. It's a 5 marks requirement. It's a 5 marks requirement. Okay, now a detailed explanation of the calculation of the capital allowance of the FL partnership for its final trading period with the sale of its equipment to JHPLC for £150,000 on 1st March 2023. A detailed explanation that what will happen in relation to capital allowances in this final period. Let's look at the question. Let's look at the memorandum. There is an equipment. The value is 150,000. Its cost was 200,000. Okay. Now, he's asking a detailed explanation of the calculation of capital allowances of the FL partnership for its final period ending with the sale of equipment to JHPLC on 1st March 23. Can you people give me an explanation that what happens in relation to capital allowance in the final year of the business? What happens in the final year of the business? In the final year of the business, there is a balancing allowance and a balancing charge. In final year of business, you do not get annual investment allowance. C. In final year of business, FL partnership will not get any first year allowance, annual investment allowance, and written down allowance. Okay, in final year of business, you don't get first year any allowances. Okay, only balancing allowance or balancing charge will arise in final year of business. Okay, in final year of business, only the balancing adjustment will arise. In final year of business, there is no annual investment allowance, no first year allowance, no written down allowance. Because in the final year, the pool will just be ended. The pool will just be closed. Okay, what will happen? You will write opening balance in pool. You will write opening balance in pool. Like if it is a main pool, you will write your opening balance in pool. If you have made any additions during the year, you will add those additions. Okay. If you have made any disposals during the year, you will remove them from the pool. Now, disposals during the year will be at lower of. Cost and disposal proceed. Okay. Cost and disposal proceed You have disposed the equipment, disposal of equipment. You have disposed the equipment. Now, what was the cost of the equipment? Can you tell me? The cost of the equipment was 200,000, whereas it is being disposed for 150,000. Okay, the cost of the equipment is 200,000, and disposal proceed is 150,000. So obviously disposal proceed is lower, so this will be removed from the pool. Okay, and then you will get balance in pool. Okay, you will get balance in pool. We don't know that what will be the balance. Okay, because we were not given with the opening balance of the pool. We were not given with the opening balance of the pool, so we don't know that what will be the final balance. If final balance in pool is positive, then it will become a balancing allowance. Okay, then it will become a balancing allowance, which will be an allowed expense. However, if balance on pool gets negative, then it will become a balancing charge, on which which will be added in trading P&L. Okay, in trading P&L of the last year. Okay, so there will be the balance in pool. So if you look at it, what he asked, a very simple question, a detailed explanation of the calculation of capital allowances of the FL partnership for its final trading period ending with sale of its equipment to JH PLC for £150,000 on 1st March 2023. Okay, now one last thing which you people should have remembered. Now see, Farina and Lauda own the partnership business. They are selling this business to JH PLC, which is a quoted company, and if you look at their shareholding, it is just 2.4% each. So they don't control this new company. They don't control this new company. So if you remember, assets of FL partnership will not transfer at written down value. I will repeat it again. Assets of FL partnership will not transfer at written down value to JH PLC, as Farina and Lauda do not control JH PLC. Let me repeat it again. See, if the assets are transferred between the businesses of the same owner, if the assets are transferred between the businesses of the same owner, you can make an election to get them transferred at written down value. But here, the assets will not be transferred at written down value because Farina and Lauda were the owners of the FL partnership, but they didn't control JH PLC. If you people remember, in capital allowances, you study that if the assets are transferred, listen to me, if the assets are transferred between the businesses whose owner is same, like for example, if JH PLC would be controlled by Farina and Lauda, so FL partnership was their business, JH PLC would be their business. So the assets may be transferred at written down value. But here, JH PLC is not their company because their holding is just 2.4% each. Okay? if assets are transferred to only one partner who is forming the company, then again we need to look at whether that partner controls the company or not. If he controls the company, then it will get transferred at written down value. Now, one student has asked a very good question. Sir, they are transferring the whole business, but why they are getting only 2.4%? See, you cannot question the data of the exam. First, make it clear. Secondly, maybe JHPLC would be a very big company. It is a quoted company. It may be doing many other businesses also. Like, for example, if we transfer our entire Mirchawala Institute to a very big university, obviously they will not give us 100% shares of that university. Okay? Like, if we sell Mirchawala Institute to Unilever, so they will not give us 100, but they will just give 0.2% to us. Okay, so maybe the Farina and Lauda, the FL partnership must be a very less value business as compared to JHPLC. But the important point to understand is that when examiner has written that they are just getting 2.4%, it's just okay. Okay, so let's read the requirement again. Let's read the requirement again. One student asked me that, sir, please do a past paper question today in which there is capital allowances. See, the capital allowances are not examined normally. Capital allowances are not examined normally at advanced tax level, because capital allowance is one of the topic which you have already studied in very detail in skills module. But this was one of the slight testing of capital allowance at ATX level. A detailed explanation of the calculation of capital allowance of the FL partnership for its final trading. So first of all, we made it clear that in the final year, you will not get any first year allowance or annual investment allowance or written down allowance. In final year, there is just balancing allowance and balancing charge. So, and then we made a working for the examiner that there must be some opening balance in the pool, then the additions made during the year, then the disposal of equipment will be at lower of two things, the cost and DP. Then the remaining balance in the pool, if it is positive, then it will become balancing allowance. If it's negative, it will become balancing charge. And we also said that assets will not be transferred at written down value because Farina and Lauda do not control that new entity. Is it clear? Everyone? But I particularly believe that it was a very easy requirement for 5 marks. It was a very easy requirement for 5 marks. Okay? Please confirm me on the chat box so that we can move forward if there is no other query. Okay? But when I look at the chat box, I feel that some of the students mix a lot of data. Like one student wrote, while I was answering capital allowance, he wrote incorporation relief. See, what you need to understand is that incorporation relief has nothing to do with capital allowances. One student referred paper to paper takeover. There is no situation of paper to paper takeover in this question. Okay? You people create a difficult situation yourself. You people mix all of the data. Always remember, think simple. Don't rush in the exam. Go step by step, and believe me, it will be easy. Okay? Let's move forward. Let's move forward. Now we have to talk on Farina, which is a 7 marks requirement. Capital allowance is done. Let's look at Farina, which is a 7 marks requirement. I want you all to concentrate on it. Can you please tell what is paper to paper takeover? What is paper to paper? I read, but still confused. Paper to paper takeover is the situation when one company takes over shares of another company, and there is a situation of share exchange. See, in this situation, one company is not taking over another company. There is no situation of share exchange involved here. If you look at this question, the simple situation is, that one partnership business is selling its business to the company. So it is not paper to paper takeover. It is incorporation concept, that we are converting our unincorporated business into a company concept. Paper to paper takeover happens when one company buys shares of another company and they enter into a transaction of share exchange. Okay, let's resume back. We are doing Farina now, which is part 2. I want you all to concentrate on it and please participate with me. Now, let's read about Farina, that what he's asking. A calculation of the inheritance tax payable by Farina in her lifetime in respect of the gift of the shares in JHPLC to the discretionary trust on 1st August 2023, and the date on which the tax would be payable. You should note that this gift will not qualify for business property relief. So, if you look at the question, here it was written that on 1st August 2023, Farina will make a gift of 15,000 of her shares in JHPLC to the trustees of the trust for the benefit of her nieces and nephews. Farina will pay any inheritance tax liability in respect of this gift. The trustees will transfer the shares to the beneficiaries over the life of the trust. Farina has already made following gifts. Now on August 23, if you read it, for the purpose of giving our advice, you should remember that value of shares. On August 23, what is the value of shares? On August 23, the value of shares is £4. Now Farina is gifting 15,000 of her shares to the trust. What is the requirement? Calculation of the inheritance tax payable by Farina in respect of the gift of the shares in JHPLC to the trustees of discretionary trust on 1st August 23, and the date on which the tax would be payable. Okay, I believe that it is a very easy requirement. Inheritance tax, or I would say lifetime inheritance tax on gift of shares of JHPLC to trust. Okay, so let's calculate it. What is the value of transfer? What is the value of transfer? 15,000 shares, and each share worth how much? Farina is gifting 15,000 shares. Farina is gifting 15,000 shares, and each share worth how much? £4. Okay, so 15,000 shares into £4, so it's £60,000. Okay, on what date she is gifting? On 1st August 2023, which is fiscal year of 2023-24. You will deduct annual exemption from it. Okay, what will be the annual exemption? Can anyone tell me? Now the previous gift was made in May 21 and July 22. The previous gift was given on May 21 and July 22. So July 22 means that exemption of 22-23 is already used. Okay, C, 3,000. Current year annual exemption of 2023-24 is available. Last year annual exemption of 2022-23 is already used. Where is it already used? It is used against cash gift made on July 22. Is already used against cash gift made to nephew on 1st July 2022. Let me repeat it again. So, the value of chargeable lifetime transfer will be, the value of chargeable lifetime transfer will be 54,000 pounds. Okay. Now, let's pick up the nil rate band. Nil rate band of 2023-24. It's, oh, sorry, it's 57. Sorry, 57. 57. Okay. 60,000 minus 3,000 is 57. Now, the nil rate band of 2023-24 is 325,000. Okay. Now, last 7 years chargeable transfers. What will be the last 7-year chargeable transfers? See, in the last 7 years, Farina has made a cash gift of 300,000 to a trust. Okay. And she has made a cash gift to her nephews of 40,000. Can anyone tell me which one of them will come in last 7-year chargeable transfers? See, one student has already sent a wrong answer. You have deducted both of them. Okay. In lifetime gifts, only CLT is a chargeable. In lifetime taxes, only CLT is the chargeable transfer. Okay. Gift to trust is the chargeable transfer only. Gift to individuals is not a chargeable transfer. In lifetime gifts, in lifetime taxes, only gift to trust is a chargeable transfer. Okay. Gift to trust made in last 7 years include gift made on what date? Include gift made on May 2021. Okay. See, the cash gift made to nephew is a PAT. In lifetime taxes, the PAT is not chargeable. Okay. Made on 1st May 2021. Okay. Now, if you look at it, value of transfer of that gift was how much? The value of transfer was 300,000. Annual exemption. Okay. What will be the annual exemption? It will be 6,000 pounds. Why it will be 6,000 pounds? Because May 21 was 21-22. And earlier than that, there were no other gifts. Okay. Annual exemption of current year and last year, both is available in gift of May 2021. Okay. Because before that gift, there was no other gift which was made. The CLT value is 294,000. So this is your last 7-year chargeable transfer. Can you tell me the available NRB? The available NRB is 325 minus 294. It's 31,000 pounds. Okay. Is it clear? Now you will apply lifetime tax on it. So on 31,000 pounds, you will apply 0%. So it is 0. And the rest value of chargeable lifetime transfer, it was 57,000 pounds. It was 57,000 pounds. So 57,000 minus 31,000. On rest of the balance, it will be 25%. Can anyone tell me? 6,500. Okay, I will repeat the things. Don't worry. It is very basic working which is being done. Total lifetime tax. Okay, let me repeat the things again. Okay, now donor is paying tax. Donor is paying tax. That's why it's 25%. It is written here that Farina will pay any inheritance tax liability in respect of the gift. Okay, lifetime tax rate is 25% because donor Farina is paying tax. Okay, let me repeat it because I think that some of the students may have got confused, but believe me, there was nothing in it to get confused. The value of transfer was 60,000 pounds. How come the value of transfer was 60,000 pounds? Because Farina was gifting how many shares? 15,000 shares. On what date? August 23. On August 23, each share worth, please tell me, on August 23, each share worth 4 pounds. So 15,000 shares into 4 pounds, it's 60,000 pounds. Then the annual exemption. Now, current year annual exemption of 23-24 is available. Current year annual exemption is available because the previous gift is in July 22, which is 22-23, and this is May 21, which is 21-22. Okay. So the annual exemption of current year is available. This is chargeable lifetime transfer, CLT. The nil rate band of 23-24 is 325,000. Last 7-year chargeable transfers will be adjusted. We are calculating the lifetime tax. Hello, are you listening? We are calculating lifetime tax, so only gift to trust is a chargeable transfer. In lifetime taxes, only gift to trust is a chargeable transfer. Gift to trust made in last 7 years include gift made on May 21. So that was value of transfer 300,000, 2 years exemption because there was no other gift made before it. May 21, then July 22. Before May 21, there was no other gift. So that gives us the CLT, which was chargeable, which used our NRB, available NRB. On available NRB, we applied 0%, and on balance, we applied 25%. Is it clear, everyone? Yes. Now there is a question. Tell me the date. Tell me the date on which this tax will be payable. Tell me the date on which this tax will be payable. Yes. See, this gift was made on August 2023. Listen to me. Many wrong answers are coming. This gift was made in August 2023, which is in first 6 months of the fiscal year. Inheritance tax of first 6 months of the fiscal year is paid on 30th April of next year. Okay. Gift to trust was made on first, what was the date? On 1st August? Yes, was made on 1st August 2023. It is in first 6 months of the fiscal year. Gift to trust was made on 1st August 2023. Its tax will be payable on 30th April 2024. The gifts which you made in first 6 months of the fiscal year, the gifts which you made in first 6 months of the fiscal year, you have to pay tax on the 30th April of next year. Okay, this was a very simple rule. You shouldn't be giving me the wrong answer. Some said January, some said 9 months. 9 months is for companies, January is for individuals, and some said after 6 months. The after 6 months rule applies when you make a gift in last 6 months of the fiscal year. Listen to me. If you make a gift in first 6 months of the fiscal year, you pay on 30th April. If you make a gift on last 6 months of the fiscal year, you have to pay tax after 6 months. Is it clear? Since the gift was made in first 6 months of the fiscal year, so you have to pay by 30th April of the next year. Okay? Now let's read further what else he's asking. Now I want you people to give me the right answer for this. A brief explanation. Okay, some student is saying, sir, please repeat. You want me to repeat about this tax payment date? Okay, listen to me. If you make a gift, listen to me. If you make a gift in first 6 months of the fiscal year, if you make a gift in first 6 months of the fiscal year, your fiscal year starts from April. April, May, June, July, August, September. If you make a gift in first 6 months of the fiscal year, you have to pay tax on 30th April of next year. If you make a gift in last 6 months of the fiscal year, then you have to pay tax after 6 months. Like if you make a gift in month of November, if you make a gift in month of November, then you have to pay tax after 6 months, December, January, February, March, April, May. I'm repeating it again. If you will listen, then you will be able to understand. If you make a gift in first 6 months of the fiscal year, if you make a gift in first 6 months of the fiscal year, you have to pay tax by 30th April. Okay. If you make gift in last 6 months of the fiscal year, you have to pay tax in 6 months. Is it clear? Oh, you are asking about the tax date of CGT corporation tax, and obviously I cannot teach you in middle of this question. For rest of the dates, you can message me after the class. I will send you my recording for that. Okay, I cannot teach you during that question, this question. Otherwise, the thing will go very far away. Okay, let me return to the question. So, what else he's asking? A brief explanation of the capital gains tax holdover relief in respect of the transfer of the shares to the trustees and the subsequent transfer of shares from the trustees to the beneficiaries. A simple question that whether gift relief will be available, a simple question that whether gift relief will be available, gift relief of CGT will be available on gift of shares to trust, and when the trust will give these shares to beneficiaries. Can you people tell me that whether gift relief will be available on gift of shares to trust? Whether gift relief will be available on gift of shares to trust? Can anyone tell me? Yes. Why it will be available? Can you tell me the reason also? The question is that on this gift of shares to trust, whether gift relief will be available? Yes, gift relief will be available because this transaction is immediately chargeable to IHT. Okay, listen to me. Availability of gift relief. Please listen to me. Gift relief will be available in capital gains tax on gift of shares by Farina to trust because this transaction is immediately chargeable to IHT as it is a chargeable lifetime transfer. Okay. One student is saying, sir, this is gift of unincorporated business. No, this is not a gift of unincorporated business. It is gift of shares. Sir, how immediately? You calculated this IHT, I believe. Immediately means you are paying tax now. Immediately chargeable. The transaction is immediately chargeable. The CLTs are immediately chargeable. You just calculated the tax 2 minutes ago and you are asking, sir, how is it immediately chargeable to IHT? You calculated it yourself. Gift will be available, gift relief will be available in capital gains tax. Despite the payment date is later, but it is chargeable. You calculated the IHT. It is not written that it is immediately payable. It is immediately chargeable. You calculated the IHT. On CLT, the transaction is immediately chargeable to IHT. That's why the gift relief is always available. Okay. Gift relief will be available in capital gains tax on gift of shares by Farina to trust, because this transaction is immediately chargeable to IHT as it is a chargeable lifetime transfer. But if you read the requirement, there is one more thing. And the subsequent transfer of shares from the trustees to the beneficiaries. One student is asking, sir, the shareholding is less than 5%, then why gift relief is available? Listen to me carefully. Just go in the summary notes, search gift relief. Search gift relief. Okay. Read this point. Transaction is one of the following. Transaction is one of the following. Quoted share in which donor has 5% holding. Sir, in this question, the holding was less than 5%. Leave this point. Unquoted shares, this will not apply because JHPLC is quoted. Leave this point. Unincorporated business. The situation is not of unincorporated business. We are gifting the shares. Leave this point. Read this one. The transaction is one of the following. So yes, the transaction is immediately chargeable to IHT. You will get gift relief if anyone will get satisfied. If anyone will get satisfied. Transaction immediately chargeable to IHT is one of the condition which is getting satisfied. So you will get gift relief. You are not required to look at the holding. Okay. So first of all, gift relief will be available in capital gains tax on gift of shares by Farina to trust because this transaction is immediately chargeable to IHT. Now, I was asking about this. Subsequent transfer of shares from the trust to beneficiaries. Gift relief will be available or not? Yes. Exit charge 6% on the market value of the asset. I'm not asking about exit charge. I'm asking about gift relief. Tell me about the gift relief. Gift relief will be available or not? Gift relief will be available or not? I'm waiting for your response. Yes, no, yes, yes, no. Available, yes, available. Mixed responses. Give me with reason. One student is saying, sir, gift relief is already claimed. See, these are two different transactions. Gift of shares by Farina to trust. Gift relief is available. This is the transaction of today. I'm asking about a later gift when trust will give to the beneficiaries. Whether gift relief will be available at that time also or it will not be available at that time. So the answer is yes, the gift relief will be available. Now see how I develop the answer. Gift relief will be available in capital gains tax on gift of shares by trust to beneficiaries. Why it will be available? Because this transaction will be immediately chargeable to IHT, as gift of assets out of trust gets subject to IHT in form of exit charge. Let me repeat it again. Okay. See, this is not rollover and holdover of plant and machinery. Here he is talking about gift relief. So you shouldn't be getting confused about rollover and holdover. This is not rollover and holdover of plant and machinery. This is a simple situation of gift relief. Okay. The new name of gift relief defined in the Finance Act is capital gains tax gift holdover relief. Okay. This is the new name of gift relief. So you shouldn't be getting confused. There is nothing to confuse about rollover and holdover here. Okay. Here the simple question is that whether gift relief is available or not. So listen to me. Gift relief will be available in capital gains tax on gift of shares by Farina to trust. When Farina is giving shares to trust, gift relief is available because the transaction is immediately chargeable to IHT as it is a CL. Okay. One transaction is closed. Farina, gifting shares to trust. It is a CLT. It is a CLT. So it is immediately chargeable to IHT. There will be gift relief in CGT. Close. Number two, trust giving shares to beneficiaries. Trust giving shares to beneficiaries. Whenever any asset moves out of the trust, there is an exit charge in IHT. There is an exit charge in IHT. Due to exit charge, that transaction becomes immediately chargeable to IHT, and that is the reason why gift relief will be available. Gift relief will be available in capital gains tax on gift of shares by trust to beneficiaries, because this transaction will be immediately chargeable to IHT as gift of assets out of the trust gets subject to IHT in form of exit charge. Is it clear? Is it clear, everyone? Okay, so it was a 7 marks requirement. It was a 7 marks requirement. See, believe me, this question is so easy till here. The next requirement is a bit difficult, but till here it has been very easy. The first requirement was on information we should consider before accepting the client. The first requirement was on the information we should consider before accepting the client. Then he then asked about the capital allowances. He then asked us about the capital allowances. Then there was some basic calculation of inheritance tax. Okay, due date and availability of gift relief. Gift of asset to trust, immediately chargeable. Gift of asset out of trust, again immediately chargeable. Okay, now the next requirement is on LODA, which is of 14 marks. The biggest requirement of this question. Okay, let's see what he's asking. LODA, a review. Yes, I can see the questions which you people are sending. Is there any question which you want to ask? A review of whether or not LODA should disclaim incorporation relief. Do you people remember that what is incorporation relief? Through incorporation relief, we defer the gain on transfer of business. See, if you remember in the memorandum, it was written something here. Capital gains tax relief on the transfer of the business to a company, incorporation relief will be available in respect of the sale. FL partnership is transferred to JHPLC. Please listen to me. FL partnership is transferred to JHPLC. Okay, one student is saying that your screen is lagging. See, if there would be connectivity issue from my side, the screen would lag with all of the students. Now, since all of the students are not complaining me, so it may be the connectivity issue at your side. You can leave the webinar and rejoin or check your connectivity. Okay. Because if it would be the issue from my side, it would have happened to all the students. Okay. Coming back. So now what was happening in the question was that FL partnership was transferring its business to JHPLC. FL partnership is transferring its business to JHPLC, and the consideration is in form of cash and shares. He said that incorporation relief will be available. Now, if you read the requirement, what he's asking, a review of whether or not LODA should disclaim incorporation relief. So this means we have to prepare two situations, one with incorporation relief and one without incorporation relief. The review should encompass the sale of FL partnership business, the gift of shares to LODA's son, and the effect of incorporation relief on the base cost of the remaining shares owned by LODA, as she intends to sell all of her shares in JHPLC in the next few years. So, what is the situation? Listen to me carefully. We have to prepare two situations, one with incorporation and one without incorporation, because the question is review whether or not LODA should disclaim incorporation. So we will prepare one situation with incorporation and one without incorporation. Now the review should include the sale of partnership business to JHPLC, the transfer of the business, the gift of shares to LODA's son, the gift transaction, because if you remember, it was written here that LODA will give 40,000 shares to her son, will give 40,000 shares to her son. The review should encompass the sale of FL partnership business, the gift of shares to LODA's son, and the effect of incorporation relief on the base cost of remaining shares owned by LODA, as she intends to sell all of her shares in JHPLC in the next few years. You should include a summary of your calculations and a statement of key issues for me to discuss with LODA. You should also include brief explanation of the amount of incorporation relief, the availability of any additional relief, and the dates on which CGT will be payable. Now it is a 14 marks requirement and we know that it will be a technical one. If not technical one, at least it is a lengthy one. If not technical, it is at least a lengthy one. So we have to prepare a review that whether LODA should apply incorporation or she should disapply incorporation. And it should include the situation of the sale of FL partnership, gift of shares to son, and effect of incorporation relief on the base cost of remaining shares. Okay, so first what you need to understand is that what incorporation relief do. What happens when we apply incorporation relief? When we apply incorporation relief, the gain, please listen to me. When we apply incorporation relief, the gain of transfer of business gets adjusted against the base cost of shares. If LODA will apply incorporation relief, then gain on transfer of business to JHPLC will get deferred and it will be adjusted against base cost of shares she is receiving. Okay, so first of all, let me make it clear that what the incorporation relief will do. If LODA will apply incorporation relief, then gain on transfer of business to JHPLC will get deferred and it will be adjusted against base cost of shares she is receiving. Incorporation relief will only be available on share consideration portion, because if you remember the question, the consideration was a mix. The consideration for the sale will be mixture of cash and shares. The consideration will be a mix. They each will get 140,000 pounds in cash and 200,000 shares. Okay, they each will get 140,000 pounds in cash and 200,000 shares. Okay. Now, when FL partnership business will be transferred, please listen to me. When FL partnership business will be transferred, three assets will be transferred: goodwill, inventory and receivable, and equipment. Goodwill, inventory and receivable, and equipment. Okay. On inventory and receivable, there is no CGT. On inventory and receivable, there is no CGT because they are exempt asset. On equipment, there will be no CGT because they will not be sold for more than cost. The CGT will only be on goodwill. The gain will only be on goodwill. On transfer of business, on transfer of FL partnership business to JHPLC, chargeable gain will only apply on goodwill. Okay. Inventory and receivable are exempt assets from CGT. Further, equipment will be sold. Further, equipments will be sold at less than cost. See, it is written. Equipments will be sold at less than cost. Will be sold at less than cost, and as they are capital allowance eligible assets, therefore no capital loss relief will be available on them. Please listen to me. It is a 14 marks requirement. So believe me, it will involve some of the working. It will involve some of the working. Obviously, 14 marks, you have to work hard. So before going into the detailed scenario, I'm developing a situation. First of all, I made it clear that what incorporation relief will do. Then I said that what will be the gain? The gain will only be on goodwill. See, if you read the question, the goodwill value is 1.3 million and its cost is 0. Inventory and receivable, there will be no CGT, they are exempt. And equipment, they will not be sold at more than cost. When they will not be sold at more than cost, so there will be no gain. And on capital allowance assets, please listen to me. On capital allowance assets, you do not get capital loss. On capital allowance assets, you do not get capital loss relief because you are already given with allowance. Okay. Gain on goodwill will be how much? Will be 1.3 million because its cost is nil. Gain on goodwill will be 1.3 million, which is its value. Okay. Cost of goodwill is 0. Okay. Share of Lauda's gain will be 1.3 million into 50% because Lauda will get 50% of the gain in her portion. Okay. Let's repeat the things again. Let's look at it again. The question is that whether Lauda should disclaim incorporation relief. It is about Lauda only, not about the entire business. It is about Lauda only. Whether Lauda should disclaim incorporation. So we will only be talking about the Lauda's share. Okay. Half business was of Karina and half is of Lauda. So first of all, we said that what incorporation relief will do. Then we made it clear that the gain will only apply on the goodwill portion. And then we said that the gain for Lauda will be 650,000 pounds. Gain for Lauda will be 650,000 pounds. Now we will develop two situations if incorporation relief is applied, situation one, and the second situation will be if incorporation relief is disapplied. Okay. Now we will develop two situations. One will be if incorporation relief is applied, and second will be if incorporation relief is disapplied. Let me repeat the things again. See, when you will understand the approach in proper manner, then only the answer will go in flow. If you will not understand the basic approach, then you will always get confused while I will draft the answer. First, we commented on the incorporation relief. Then we commented that which gain will be chargeable. And then we said that Lauda's share of gain is only 650,000 pounds. Is it clear? Everyone? Everyone? Any query till here? Okay. Now we will start this detailed working after break. We are taking a break of 15 minutes because each of the working will at least takes 30 minutes and it will be time taking. So let's take a break of 15 minutes first and then we'll resume and then we'll go in the detailed working after break. Okay. Okay, everyone, let's resume. Please confirm me if you people are back. Everyone, please confirm me if you people are back. Let's resume. Okay, so we were making a comparison that whether LODA should apply incorporation relief or disapply. So first of all, I have explained that if LODA will apply incorporation, then what will happen? Okay, we refer that if she will apply incorporation, then gain on transfer of business will get deferred. Okay, then we referred that only gain on transfer of business is on goodwill. Okay, inventory and receivable are the exempt assets. Equipment is also exempt because it will be sold at less than cost. Okay, only gain will be on goodwill. Okay, only gain will be on goodwill, and the total gain on goodwill is 1.3 million, and LODA's share will be 50% of it, which is 650,000. Okay, so let's start the working. I want you all to concentrate on it. Now, if incorporation relief is applied, then what will happen? Okay, first of all, transfer of business to JHPLC. First of all, transfer of business to JHPLC. Now, please concentrate on it carefully. Gain on transfer of business, is 650,000. Okay, gain on transfer of business is 650,000. LODA's share of gain. Now we will deduct incorporation relief from it. Please listen to me carefully while we develop the answer. Okay, please listen to me carefully. Now we will deduct the incorporation relief from it. Can you people tell me that what will be the incorporation relief? See, the consideration is each receive, Farina and Lauda will each receive consideration of 740,000. Farina and Lauda will each receive consideration of 740,000. 140,000 is in cash and rest will be in form of shares. So we will calculate the incorporation relief. The incorporation relief is only available, will only be available on share portion of consideration. Okay. Now, the gain is 650,000 multiplied by. Please listen to me. The gain is 650,000. Now, the total consideration is 740,000. The total consideration is 740,000. You can look at it here. 140,000 is in cash. So automatically the remaining will be share consideration. The remaining will be the share consideration. So the share consideration is 600,000 pounds. Okay. Please look at it carefully. It is carefully. Now gain on transfer of business is 650,000, which is the LODA's share. C, three assets were transferred: goodwill, receivable and inventory, goodwill, receivable and inventory, and equipment. Receivable and inventory is exempt asset. Equipment was in loss. And since it was a capital allowance asset, so no CGT on it. The gain was only on the goodwill. We have discussed it here. Okay. The total gain on goodwill was 1.3 million, of which the LODA's share was 50%. Okay. Now, the gain on transfer of business was 650,000. LODA's share of gain. Incorporation relief will only be on share portion of consideration. Okay. Total consideration was 740,000, out of which 140,000 was cash consideration. Okay. Incorporation relief will be. Can anyone tell me the incorporation relief? 650,000 is the gain multiplied by 600,000 divided by 740,000. So it's 527,027. So chargeable now will be 122,973. Please listen to me carefully. See, the gain on transfer of business was 650,000. There will be incorporation relief because we are developing a situation when incorporation relief is applied. Incorporation relief will only be available on share portion of consideration. Total consideration was 740,000 pounds. It is written here. Yes, here. Farina and Lauda will each receive consideration of 740,000 pounds. 140 in cash, 140,000 pounds in cash, and 200,000 shares. Now from 740 is, if 140 is cash, so remaining 600,000 is the value of shares each will receive. Okay, it is written that they are wealthy individuals who use their annual exemption every year. So the annual exemption is not available. Can anyone tell me the capital gains tax? Now one student is saying, sir, why we can't use incorporation relief of 600,000? My friend, you are making a conceptual error. Okay, incorporation relief is on the proportion of the gain. The gain is 650,000. You will proportion the gain. Okay, this is not the value of the business that you will directly deduct 600,000. Please, okay, don't do such mistakes in last week of the exam. This is not the value of the business that you will directly deduct the value of shares from it. The gain is 650,000. You will split the gain. You will split the gain on share portion consideration and the cash consideration. On share portion consideration, you will get incorporation relief. Okay. Now, can anyone tell me the capital gains tax? Can anyone tell me the capital gains tax? Annual exemption is already used. Okay. Now, what will be the rate of capital gains tax? Can anyone tell me? One student said 10% and one said 20%. Please, other students also give their vote whether it will be 10 or 20. And also give the reason. If you are saying 10, then why 10? If you are saying 20, then why 20? 10 for IR. Very bad answer. Incorporation relief has no relation to rate. 10% because of better business asset disposal relief. 10% rate will apply. Okay, 10% rate will apply. Business asset disposal relief, better, will be available on transfer of going concern business. Okay, Lauda has owned business for more than 2 years. See, they have been running the business for more than 2 years. They started the business in May 17 and today it is March 23. Okay, business asset disposal relief will be available. You people don't remember many of the rules. Now I was expecting a question from you people that, sir, we have studied that on goodwill sometimes better is not available. On goodwill sometimes better is not available. Why that situation is not applying here? Yes, that situation will not apply here because it is not a connected company. Okay, they only own 2.4% each. They only own 2.4% each. Okay, restriction of bidder will not apply. Restriction of bidder will not apply as JHPLC is not a close company of LODA. Okay? Restriction of bidder. Bidder is not available on goodwill if we sell it to the close company. But JHPLC is not their close company. So what will be the capital gains tax? 12,297. 12,297. Is it clear? Okay. I will repeat it again. Gain on transfer of business is 650,000 pounds. LODA's share of gain. Okay. Incorporation relief. Incorporation relief is available on share portion of the gain. Please listen to me. Incorporation relief is available on share portion of the gain. So we took incorporation relief. This is chargeable now. Now the capital gain tax will be 12,297 because of bidder. Is it clear? Now, can anyone tell me the payment date? Because he has asked that we have to write the payment date also, and the dates on which any CGT will be payable. Can anyone tell me the payment date? What will be the payment date of this gain, of this tax? Okay. What will be the payment date? Now, transfer of business is done on what date? Transfer of business is done on what date? Can anyone tell me? Is done on 1st March 23. See, this is not inheritance tax. Now we are doing capital gains tax. Transfer of business is done on 1st March 2023, which is fiscal year of 2022-23. CGT will be payable on 31st January 2024. Okay? See, you shouldn't be doing the basic errors. If you will do basic errors, then you will lose easy marks. I will repeat it again. Please listen to me carefully. See, transfer of business to JHPLC. Now, gain on transfer of business was 650,000. We deducted incorporation relief on the share portion. The chargeable now was 122,973. Due to bidder, the rate of tax is 10%. So this is the tax 122,297. Is it clear? Transfer of business is done on 1st March 23, which is fiscal year of 22-23. Okay. So the CGT is payable on 31st January after the end of fiscal year. So 22-23 is the fiscal year. 31st January after the end of fiscal year, which will be 31st January 2024. Okay. Read the extract of the email. The review should encompass the sale of FL partnership business, comma, the gift of shares to LODA's son. Now we have to move forward. Gift of shares to LODA's son. So first of all, we will calculate the base cost of shares. Base cost of 200,000 shares of JHPLC received by LODA on 1st March 2023 will be. What will be the base cost? What will be the base cost? Value of shares received. We have received 200,000 shares. We have received 200,000 shares. Please participate with me. We have received 200,000 shares, and on 1st March 23, each share will worth how many pounds? 3 pounds. So value of shares is 600,000 pounds. Value of shares received is 600,000 pounds. You will deduct the incorporation relief. Incorporation relief. What is the incorporation relief? 527,027. So, base cost of shares. What is the base cost of shares? 72,973. Base cost of 200,000 shares received of JHPLC. Please tell me, am I doing any difficult thing? Is it difficult? No, it is very simple. Just follow the approach, follow the sequence. Don't rush in the exam. First of all, I explained that what incorporation relief is. Then I identified the gain on transfer of business. There were three assets given in the question: goodwill, inventory, and equipment. Three assets were given. Okay. And then I calculated the LODA's share. We applied incorporation relief, capital gains tax, and we are here till base cost of shares. Base cost of 200,000 shares of JHPLC received by LODA on 1st March 2023 will be. Now let's move forward. Gift of how many shares? 40,000 shares to son, if I am not wrong. If I am not wrong, gift of 40,000 shares. LODA will give 40,000 of her shares in JHPLC to her son. Okay? Gift of 40,000 shares to son by LODA. Now, what will be the implication on this gift of shares? Can anyone tell me? Disposal proceed is equal to market value. See, we are working about CGT. We are working about CGT. Incorporation relief is concept of CGT. Some students may mix their answer with IHT. Don't do this. We are doing CGT. Disposal proceed is equal to market value. How many shares? 40,000 shares. What is the value of shares? On 1st June 24, it is 5 pounds. On 1st June 24, it is 5 pounds. Value on gift date of 1st June 2024. So the market value is 200,000. Is it clear? Less cost of 40,000 shares. Can anyone tell me the cost of 40,000 shares? The base cost was 72,973 shares. Base cost of 200,000 shares was 72,973. Okay. Cost of 40,000 shares will be how much? 72,973 divided by 200,000 shares multiplied by 40,000 shares. 14,995. Okay. So this is the chargeable gain. What will be the chargeable gain? What will be the chargeable gain? 72,973 divided by 200,000 multiplied by 40,000. So it's 595. Sorry, 595. 14,595 minus 200,000. So the chargeable gain will be 185. The chargeable gain will be 185,405. Is it clear? Please tell me, please give me a response. Yes. Okay. Now, it is gift of shares. Tell me whether gift relief will be available or not. Tell me whether gift relief will be available or not. Yes, no, yes. Yes. Gift relief will be available or not? Gift relief will not be available. Wrong answers. Gift relief will not be available. Why you people give me wrong answers? Gift relief will not be available. Why it will not be available? It is gift of quoted shares in which donor should have 5% ownership. LODA only owns 2.4% ownership. LODA only owns how much shares? 2.4%. Okay. Second, unquoted shares, leave it. Unincorporated business, leave it. Is it a transaction immediately chargeable to IHT? No. It is a PAT. It is a PAT. PAT is not chargeable to IHT immediately. PAT is not chargeable to IHT immediately. CLT is chargeable. There is no lifetime tax on PAT. And it is not agriculture property. Okay? Please don't give me wrong answers. Gift relief will not be available as shares are quoted and LODA owns less than 5% shares. And obviously the transaction is not chargeable to IHT also because it is a PAT. Okay. So what will be chargeable now? Tell me what will be chargeable now? 185,405. Annual exemption is not available. It is given. Annual exemption is already used. Okay. What will be the capital gain tax? Tell me. What will be the capital gain tax on it? What will be the rate of CGT? What will be the rate of CGT? 185,405 multiplied by. Now someone is saying 10, someone is saying 20. Why? Why 10? The badder will not be available here. The badder will not be available here. Badder will not be available on sale of shares. Badder will not be available on sale of shares as LODA's holding is less than 5%. Badder will not be available on sale of shares as LODA's holding is less than 5%. Okay. LODA is additional rate taxpayer. If you remember, LODA is additional rate taxpayer. It was written here. Farina and LODA both are additional rate taxpayers. Okay. One student is saying, sir, badder is not available because it is sale of individual asset. It is sale of shares. Shares is not individual asset. Badder is available on shares, but if the holding is more than 5%. Here, the holding is less than 5%. LODA's holding is only 2.4%. So 185,405 into 20%. 37,801. 37,801 is the capital gains tax. Is it clear? Tell me the payment date. Tell me the payment date. Tell me the payment date. Gift of shares is made. Gift of shares is made on what date? Gift of shares is made on what date? Is made on 1st June 2024. Is made on 1st June 2024, which is fiscal year of 2024/25. Payment date will be 31st January 2026, because 24-25 is the fiscal year. June 24 is 24-25. You have to pay on 31st January after end of fiscal year. Okay, one student is saying, sir, you have calculated CGT is wrong. Why? 185,405 is the gain, and we have applied 20%. 37. Oh, it's 37081. Sorry, transposition error. Okay, sorry. So let's look at the things again. First of all, we said that what happens if we apply incorporation relief? The gain will get deferred. We identified that the gain will only be on the goodwill. Inventory and receivable are exempt assets. Equipment is being sold at loss. We identified the LODA's share of gain. We identified the LODA's share of gain. Okay. Now, on LODA's share of gain, we applied incorporation relief. 527,027 on share portion consideration. We got the value of chargeable now. The bidder was applicable. Okay. The bidder was applicable. Why bidder was applicable? Why bidder was applicable? Because 122,973. It was a transfer of ongoing business. Okay. We calculated the CGT and we discussed the date of it. Then we identified the base cost of 200,000 shares. And we said that gift of 40,000 shares to son by LODA will create a gain. There will be gift relief. This will be chargeable now, and this will be the CGT. Is it clear? Please tell me. Any question till here? Okay. Let's read the requirement what he's asking. The review should encompass the sale of the FL partnership business, done. Proposed gift of shares to LODA's son, done. And the effect of incorporation relief on the base cost of remaining shares owned by LODA. So also tell me the base cost of remaining shares. Also tell me the base cost of remaining shares owned by LODA, as she intends to sell all of her shares in JHPLC in next few years. So can anyone tell me base cost of remaining shares? Base cost of remaining shares of LODA. Okay. Base cost of 200,000 shares was 72,973. LODA has gifted 40,000 shares to son. Remaining shares are 160,000 shares. Remaining shares are 160,000 shares. Okay. Their base cost will be, what will be their base cost? 72,973 divided by 200,000 multiplied by 160,000. So their base cost will be 58,378 as written by one of the student. Okay. So if you look at the answer which I have drafted, see, this is a 14 marks requirement. Believe me, it involves a lot of basic concepts. But when there are lots of concepts and small calculations involved in the question, there is a very high risk. Listen to me. When there are very small calculations involved in the question, there is a very high risk that you can miss any of the point and you can make an error. Now, first of all, what you need to understand is that if you will look at the marking scheme, still only half question is done. We have only done if it is applied. The half question is if it is disapplied, we haven't done it. Okay. Now, what I'm saying is, if you will look at the marking scheme of this question is of 14 marks. but examiner has allowed 17.5 marks in this question, almost 17.5 marks, which means the examiner has kept a grace marks of 3.5, has kept 3.5 grace marks in this requirement, which means that even if the student will forget some of the rules, then also he can get the complete score. So this means that examiner recognizes this fact. The examiner recognizes this fact that there is a possibility that students may miss few small things. So as I always say to you people is that never go for perfection in the exam. You have to complete the exam in given time. So while you are doing the exam, don't go for perfection. Just save your time and move forward. Even if you make any small error, you will lose marks for it. But it is better to move forward rather than spend too much time and going for perfection. Okay, so this was a situation when incorporation relief is applied. We calculated the base cost, we calculated the gift of 40,000 shares. Now, what will happen if incorporation relief is disapplied? Now, let's look at it. Transfer of FL partnership business to JHPLC. If incorporation relief is disapplied, then what will happen? Look at it. Okay. If incorporation relief is disapplied, then what will happen? Okay. Lauda's share of gain. What is the Lauda's share of gain? It is 650,000. Okay. Or you can say gain on transfer of business. Okay, so it's Lauda's share of gain, which is 650,000. Now incorporation relief will be, now incorporation relief is 0. IR is disapplied in this scenario. Okay, now, so the chargeable now will be 650,000. What will be the capital gain tax on it? What will be the capital gains tax on it? The bidder will still be available. Okay, bidder will still be available. Same argument. The bidder will still be available. It has nothing to do with the bidder. You are disapplying IR. You are not disapplying bidder. Bidder is still available. Okay, the bidder is still available. The CGT will be, the CGT will be 65,000 pounds. Okay, the payment date will also be same. See, that payment date will also be same. There will be no change in the payment date. The payment date will also be the same. We have just disapplied the bidder, or we have just disapplied incorporation relief. We have just disapplied incorporation relief. So the gain is not deferred, it has become chargeable now. Please listen to me and try and understand. Believe me, it is very easy. Gain on transfer of business is 650. Same thing as above. Same thing as above. Just we have removed IR. Just we have removed IR. Chargeable now is 650. Capital gain tax will be 65,000. It will be payable on the same date as earlier. Is it clear? Please tell me. Okay. Now, what about the base cost of shares? What about the base cost of shares? What about base cost of shares? Same thing. Just you can just pick it up from here. Oh, sorry. I think it cannot be pasted. The table cannot be pasted. Okay. Base cost of 200,000 shares received by Lauda on 1st March 2023 will be, what will be the base cost of shares? Okay. Market value of shares, 200,000 shares multiplied by £3. Okay, market value on 1st March 2023. Okay, so it is 600,000. Now we have not claimed any incorporation relief. IR is disapplied in this situation or in this scenario. Base cost of 200,000 shares is 600,000 pounds. Is it clear? Okay. Now this is the base cost of 200,000 shares. Now, gift of shares by Lauda to Sun. Okay. Same working is applying. Same working is being replicated. Same working is being replicated. Gift of 40,000 shares to Sun by Lauda. Everything is same. Now just the base cost will get changed. Okay. Gift of 40,000 shares by Lauda to Sun. On what is the date? On 1st June 2024. On 1st June 2024. Disposal proceed is equal to market value. Okay. 40,000 shares multiplied by what is the market value? The market value is £5. Okay, so some repeat work. I hope that you people are understanding. Market value on gift date. So it's 200,000. Okay, base cost of 40,000 shares. Okay, so base cost of 200,000 shares was 600,000 pounds. You just calculated it here. You just calculated it here. Base cost for 40,000 shares will be 600,000 pounds divided by 200,000 shares multiplied by 40,000 shares. What will be the base cost? 120,000, as many students have sent. So the chargeable gain will be 80,000. Okay. Gift relief will be available or not? Gift relief will be available or not? It has nothing to do with the gift relief. It has nothing to do with the gift relief. Same argument will be pasted here. Gift relief will not be available. Okay. This will be your chargeable now. This will be your chargeable now, 80,000. Okay. Annual exemption will not, is already used as per the question. Okay. Then capital gains tax. So the CGT will be at how much rate? 20%. Why better is not available? Same, we have already written above. We have already written above. See, in this situation, nothing is changing. In this situation, nothing is changing. Only the IR is disapplied. Only the IR is disapplied. Rest all is same. So this is your CGT 16,000. Better is not available because in JHPLC our holding was less than 5%. Is it clear? What will be the tax payment date? What will be the tax payment date? Same we have written above. Gift of shares is made on 1st June 2024, which is fiscal year of 24-25. Payment date will be 31st January 2026 because it is fiscal year of 24-25. We have to pay on 31st January after the end of fiscal year. See, what you need to understand is that this answer may appear lengthy, but it is just a repeat thing. We have just disapplied the incorporation relief. Rest all working is same. Okay. What will be the base cost of remaining shares of LODA? What will be the base cost of remaining shares of LODA? In this situation, base cost of remaining shares of LODA. Okay. Now, in this situation, base cost of 200,000 shares was 600,000 pounds, because in this situation we didn't apply incorporation relief. Okay, LODA gifted 40,000 shares to son, therefore remaining shares are 160,000 shares. Base cost will be, what will be the base cost? 600,000 is the base cost of how many shares? 200,000 shares multiplied by 160,000 shares. So it will be 480,000 pounds. Let me repeat the thing one time. Let me repeat all the working one time, and then we'll move towards summarizing the entire calculation. Believe me, it is easy. Yes, it was lengthy. It involves some very basic concepts. Incorporation relief. Believe me, this is taxation of skills module, not of advanced tax. This is basic taxation. But students make errors in it because they rush while doing the question. So first of all, we highlighted that what incorporation relief will do, because the question was on disapplying IR. Okay. Then we commented that the gain will only arise on goodwill, because inventory and receivable are exempt asset and equipments are being at less than cost. They are being sold at less than cost. Gain on goodwill will be 1.3 million. LODA owns 50%, so her gain is 650. Then gain on transfer of business 650. Incorporation relief on share portion. Incorporation relief on share portion. Chargeable now, and then there will be better. Better will be available because they are selling ongoing business. Better will be available because they are selling ongoing business. Okay. Better will be available because they are selling ongoing business. Okay. The restriction of goodwill will not apply because company is not a closed company. Okay. Then we said that transfer date is March 23, which is a fiscal year of 22-23. So if fiscal year is 22-23, the CGT will be payable on 31st January after end of fiscal year. So 31st January and after 23. So after 23, it will be 2024. The base cost of 200,000 shares will be, after deducting IR, this will be the base cost. Then we move towards gift of 40,000 shares. We simply allocated the cost. Gift relief and better was not available on shares because the ownership in shares was less than 5%. And this was a PAT. It was not chargeable in IST also. And then we calculated the base cost of remaining shares. Sir, how are you adding multiplication sign? Shift and X. Shift and X, a capital X. Okay. Now, if incorporation relief is disapplied, then what will happen? Sir, can we do this entire working in spreadsheet? Yes, you can do. Okay. Maybe in spreadsheet, it would be more easy in so much detailed working, like you can apply the formulas. But I personally feel more comfortable in doing on a single screen. Okay. But that is, both options are permitted. If incorporation relief is disapplied, now IR will be 0. Whole gain will be chargeable now. Okay. Due to better, the rate will be 10%. Now, no reduction in base cost, gift of shares, chargeable gain, and tax. Is it clear? Now, he's asked us in the extract The review should encompass sale of FL partnership business. Should encompass sale of FL partnership business. Proposed gift of shares to Lauda's son. Proposed gift of shares to Lauda's son. And the effect of incorporation relief on base cost of remaining shares. So this paragraph is done. Sale of FL partnership business, gift of shares and base cost. Now what is he asking? You should include a summary of your calculation. You should include a summary of your calculation and a statement of the key issues for me to discuss with Lauda. You should also include brief explanations of the amount of IR available. We have explained it. The availability of any additional or alternative reliefs, we have explained it, that better will be available, gift relief will be available. We have explained the additional reliefs. And the dates on which CGT will be payable, we have also given the dates. Now we just need to prepare this summary and any key issue which the manager should discuss with Lauda. Okay, so let's prepare a summary. Let's prepare a summary. Okay, now we have worked out two situations. One is if incorporation relief is applied, and other is if incorporation relief is disapplied. Okay, we have worked out two situations, if I'm not wrong. Okay, now CGT on transfer of business. Okay, what was the CGT on transfer of business? Let's look at both the situation. If incorporation relief is applied, please listen to me. If incorporation relief is applied, CGT on transfer of business was 12297. CGT on transfer of business was 12297. 12297. If incorporation relief is disapplied, please participate with me. If incorporation relief is disapplied, okay, one student is asking, sir, in what circumstances it cannot be applied? See, incorporation relief is available here, but it is our choice that we can disapply it. Incorporation relief is disapplied by choice. Okay, here incorporation relief is applied because consideration is share consideration and ongoing business is being transferred. So incorporation relief is available. But if you read the extract, he said a review of whether or not Lauda should disclaim IR. Okay, it is your choice to either claim or disclaim the review. Okay, so here we are not talking due to tax department, it is entirely our choice. So if incorporation relief is disapplied, CGT on transfer of business is 65,000. CGT on transfer of business is 65,000. Then CGT on gift of shares. CGT on gift of shares. Now, what was the CGT on gift of shares? Do you remember? If incorporation relief is applied, this was the CGT on transfer of business. And this was the CGT on gift of shares. See, we are preparing a summary of the total CGT in both cases. So this is 37,081. CGT on gift of shares here is 37,081. And if IR is disapplied, this is the heading. If IR is disapplied, CGT on gift of shares is 16,000 pounds. So, can anyone tell me the total CGT? Can anyone tell me the total CGT of both situations? Can anyone tell me the total CGT of both situations? Here it will be 49,378. Okay. And here it will be 81,000 pounds. So this is the total CGT on both the situation. One student is asking, sir, why CGT is higher? Why is CGT higher on if IR is applied? If IR is applied, the CGT is lesser. I have just totaled it. Okay, 49378. Okay. So we have prepared the summary for both of the workings. We have prepared the summary for both of the workings. Okay. Now what else he asked? You should include a summary of your calculation and a statement of the key issues for me to discuss with LODA. So what are the key issues which you can talk on? Now this key issue requires some good understanding. Listen to me. Total CGT is lesser if LODA applies incorporation relief. Total CGT is lesser if LODA applies incorporation relief, because in that case the total CGT is 49378. But there was one important thing to consider here. If you look at the base cost of remaining shares, please listen to me carefully. If you look at the base cost of remaining shares, if you disapply IR, your base cost is 480,000. If you disapply IR, your base cost is 480,000. And if you apply IR, your base cost is 58,378. What you need to understand is that when your base cost is less, your future gain will increase. When your base cost is less, your future gain will increase. See what I'm writing and then I will explain it to you. However, LODA needs to consider that if incorporation relief is applied, then base cost of remaining shares is less by how much? Here the base cost is 480,000. Here the base cost is 480,000 minus, and in case of applying the base cost is 58,378, is less by how much? Is less by 58,378. Is less by how much? I will repeat it again, so listen to me carefully. Is less by 421,622. This will create additional CGT when LODA will sell these remaining shares of how much? 421,622 into 20%, because on shares there will be no bidder. This will be 84,324. This will be 84,324. Now just listen to me carefully. Now if incorporation relief is applied, the today's CGT is 49,378. And if incorporation relief is disapplied, today's CGT is 81,000. Total CGT is lesser by how much amount? Can anyone tell me? 81,000 minus 49378. It is lesser by how much amount? 31622. If LODA applies incorporation relief. But if I consider the impact of the base cost, it will create an overall loss for LODA. Now I know that by now you all must be completely confused and thinking about that whether we should give ATX or defer it. Okay, see, I will say it again. Don't make conclusions on small things. Listen to me first. What we have done in this entire question. The overall question was easy, but making the final conclusion was a bit difficult. See, if incorporation relief is applied, okay, then the today's CGT is 49,378, because this includes the gain on transfer of business and gain on shares, the gift of shares. And if it is disapplied, the CGT of current data is greater. Okay, but we have to think that if incorporation relief is disapplied, it is increasing the base cost. Increased base cost means lesser gain in the future. One student is asking, sir, what about the gain which we deferred? The gain which you deferred is already adjusted in the base cost. That is the reason why the base cost is less when you apply IR. However, LODA needs to consider that if incorporation relief is applied, then base cost of remaining shares is less. And this less base cost will create additional CGT in future. This less base cost will create additional CGT in future. So LODA shouldn't be taking the decision on today's factors only. She should think about the future also. Because when she will sell the remaining shares, at that time, there will be no bidder. See, just listen to me with a relaxed peace of mind. When we are transferring business, we are getting better. When we are transferring business, we are eligible for better. But when we will sell the shares, we will not get better. Because on shares, our shareholding is less. On shares, our shareholding is less. On shares, we will not get better. So it is better that we make the gain chargeable now. It is better that we make the gain chargeable now, because later on shares, we will face a very high tax. Because on shares, we will not get business asset disposal relief. Let's review this question again. Let's look at this part again. See, he asked us that whether LODA should apply or disapply incorporation relief. He asked us that whether LODA should apply or disapply incorporation relief. Okay, so first of all, we explained that what incorporation relief will do. First of all, we explained that what incorporation relief will do. Then we argued that the gain is only on goodwill, and we calculate the LODA's share. Then we made two sets of working, if IR is applied and if IR is disapplied. If IR is applied and if IR is disapplied. We made two set of workings, if IR is applied and if IR is disapplied. And then we made a summary that if IR is applied, then this will be the tax on transfer of business. And if IR is disapplied, this will be the tax on transfer of business. Then gift of 40,000 shares. This will be the tax. So we calculated the total taxes of both the situations. Then we said that yes, the total tax is less when we are applying IR. But think about the situation when you will sell remaining shares. Think about the situation when you will sell remaining shares. Because when you will sell the remaining shares, you will not get better. When you will sell remaining shares, you will not get better because your shareholding is less. This will increase your tax. Okay. Now, one student has identified a very good point. That, sir, this is the same principle which we studied during the course. That if we are getting better on the business, please listen. If we are getting better on the business, but not on the shares, if we are getting better on the business, but not on the shares, then it is better to make the gain chargeable now. Disapply IR, so that today you can get the benefit of better. This is what we have highlighted in the summary. Okay. So this was the question number 1, Farina and LODA. And this was the question 1 of specimen paper. Question 1 of specimen paper. I have one question from you people. Now see, it's just 10 minutes in our webinar. I just want to make some conversation with you people. I have a question. Before doing this question, do you all have studied IR better? Just forget about this question. It is just 1 week to the exam. I can say it guaranteed that you all had knowledge of IR and better. Now just listen to me. Go and look at your register and revise better and IR. Okay? And then think about the question. Is your register knowledge, is your book knowledge sufficient to do this question? Is your book knowledge sufficient to do this question? So obviously the answer is no. Your knowledge of the book, your knowledge of the notes, your knowledge of the register is something different, and the past paper is something different. What you people do is that you keep on revising the rules daily. You wake up every morning and you just revise the rules. You wake up every morning and you just revise the rules. Believe me, knowledge of rules only will not make you pass. Knowledge of rules is one thing and past papers are a different thing. Knowledge of rules is one thing and past papers are a different thing. I'm teaching to a diversified audience. Many of you must have done self-study. Many of you have studied from me, and many of you have studied from other tutors. But see, what normally the tutor do or what normally the self-study students do is they just study the topics and they do topical practice. But those students who have studied from me, they know that once I'm done with the course, I go towards the past papers again. We have 19 sessions on complete past papers. Okay. Now, even I'm talking about the students who haven't studied from you, who have done self-study. Now, my advice to you people is we have done 4 classes on past papers. We have done 4 classes on past papers. At least go on YouTube and gain benefit of these free resources. See 1, 2, 3, 4, 5, 6, and 7. When you have gained in 4 sessions, just think about a situation, you will get more benefit when you will do more past papers. These are 7 sessions more. They are available on my YouTube also and also on the YouTube of ACCA Pakistan. Go and do more and more past paper sessions. Go and do more and more past paper sessions. And whenever you face any difficulty in any past paper question, send me. I'll guide you. Okay, but just one piece of advice. See, we are teachers, we are normally occupied in our classes. Like for example, if I'm taking your class, lots of messages are getting piled up on my mobile, so I respond to all of them, but it takes time. Like if you will message me now, it will take 3-4 hours or a day for me to respond you, because there are lots of messages and lots of students to whom we have to deal. So now what is the advice? Sir, it is just 5 days to the exam. What is the advice? The advice is divide your study hours in 3 portions. If you study 10 hours, divide it in 3 hours. If you study 12 hours, divide it in 4 hours. Divide it in 3 portions. 1 portion for revision of rules. But always remember that even if you will revise the rules 100 times, listen to me, even if you will revise the rules 100 times, then also you will forget them, because in advanced tax there are so many rules. So don't go for perfection on rules. Revise them daily. 5 days, daily revise them. 1 portion of the day. Second portion of the day, open some past papers. Read the question, read the examiner answer. Read the question, read the examiner answer. In this way, you will be able to look at new requirements. Portion number 3, open the practice platform and solve papers on your own. Once you are done with the paper, do self-marking. Okay? And one last piece of advice: please don't waste your time on small requirements. What you people do is, like, you are doing a past paper, you find the requirement of 3 marks, or you find a small point, and then you say, oh, I haven't studied it, or I have forgotten it, and then you waste your entire day in crying and being frustrated that why I have not studied these 2 lines. See, these are only 5 days to the exam. One small point or one small line will not create a difference between pass and fail. Look at the greater portion. Revise the rules, do the past papers. Don't worry if you have forgotten a small point. Okay? Do cost benefit analysis. Like, for example, if you cannot remember this rule of gift relief, and now you start crying that, oh, I'm forgetting everything, what will I do? Don't do this. Please don't do this. Revise rules daily, daily do past papers, daily attempt past papers. Okay. Sir, what topics are important in the exam? See, advanced taxation is a paper in which you cannot predict importance. It's a professional level paper. But still, if you look at the exams, you can find that losses are examined every time. Corporation and individual losses, group losses. Losses are very important. In trading income, basis period is also very important. Basis period is also very important. You can prepare employment share schemes. That is also very important. It also comes normally. You can prepare individual overseas issues. They are also very routine topic. Then in IHT is also very routine. In CGT, you can prepare gift relief, rollover relief, holdover relief. Okay, so these are the topics which come regularly. Okay, I hope that these 4 days have helped you, and they will increase your chances of passing the exam. My advice is that do these 4 days, attempt these remaining sessions also, and then if you have any query, you can ask me on my WhatsApp number. My WhatsApp number is, I think I have told you people earlier also, my WhatsApp number uh, is 0092 835 0092 345 8099 831. You people can WhatsApp me. Even if you are not my student, then also you can ask me a query. You can ask your mock exam, send your mock exam for marking. Okay, and sometimes my reply may get delayed, but don't feel that I will not reply. I will always reply to you, maybe one day later, but I will reply you. Okay, like one day later means a 24 hours gap. Okay, thank you everyone, and hope to see you all to pass this exam with flying colors. Thank you everyone.